as we are doing it. Welcome to stockmarketfunding.com. We're doing two shows. We're doing the blog, our radio talk show, and we're also presenting to you right here the weekly chart on the Dow. So basically what we're talking about is SMFI on the economy that would affect this Dow. So basically, as I said, why could the Dow go to 14,000? That's right back up where all the problems started. Now, granted, the housing market and everything else is still, everything else is still in turmoil, but let's be Pacific. Let's be Pacific. I will tell you what will start a major short cover rally, and I will also tell you what would make this economy work. I've told you what doesn't make the economy work, but let's have that glimmer of hope and prayer for the people who suffer in America, for the young families in America, for the young working force in America. Let's talk about the small business communities in America. Let's talk about the family shop owns in America. Let's talk about the failure of the institutions not lending money and hoarding the cash in America and not releasing it. Well, here, let me explain something to you. What could change it all? And I'm going to tell you right now here on the Dow. The Dow had made a big haircut when we told people, and we were telling people to go to cash on 418. We have the live videos on our homepage. On that 418, we were telling people to go to cash on 411. We were even telling people at that time on 4-4, the week of 4-4, the week of 411, and once again, folks, the week of 418 to go to cash. That the whole move there was on very, very, very light volume. Now, let me tell you what could take it the opposite way, because one thing about stockmarketfunding.com, we already told you why it would go to 5,000 in year 2011 and 12. That's because you're going to tax the economy, you're going to tax small businesses. They're not lending money to support that community. What would make the money start to come off and start giving it out where it would be a direct hit to the positive, direct hit to entrepreneurs, to everyone alike, is that here's why the Dow could go on a major rally in 2011, because the stimulances have worked. They just had peaked. That's why the earnings season is so great that we told everyone that it would be. But people have been still selling into it because they're not sure what growth will be in other parts of the world. And the Chinese also have over $1.1 trillion in loans out there, and they already see a 23% possible delinquency there. Now, within any economy, within any stimulances, even though that they have failed in the past, what we care about here is that you know what the upside would look like versus the downside. There will be one of the two events that actually happen within the next 90 days or sooner. And here's the other one as follows. On the chart here that I'm showing on the Dow Jones, the 200-week moving average at 11,000. Now, what could propel a rally up to the 12,000 mark and up to the 13,000 downtrend neckline would be the following. And here's how simple this is going to be for you. And I also want you to be quite aware that the Obama administration doesn't have a leg to stand on at this point in time. Back when Clinton was in presidency, and he had 2 terms there, we did have some long-term prosperity, but let me tell you what sparked that prosperity. Somebody talked into Mr. Clinton's ear and said, look, if you don't do this, you're going to go down. This economy is going to go worse than what it was back then. That was back around the Gulf Wars and stuff, and it was pretty bad up until 94. And then thereafter, 2 years up until it was 96 that we took off up to the year 2000, had a great 4-year run. So let me tell you right now, here's what it would be. if they extend the tax cuts, they take the tax cuts off, they take the death tax off, so they take all of these federal taxes and extend them, because you can't do this. And rather, Mr. Obama has a revelation from some other human being that is halfway smart to tell him, look, there's been enough suffering, and there has. But let me tell you what will get the market going directly, would be that those tax cuts are going to stay the same. They need to get rid of the capital gains tax, because that capital gains tax that you pay, you're already paying tax, number one. It's a double taxation. Okay. They need to get rid of that, but they need to extend the tax cuts, and they need to take the lower rate structure in the banking industry, where the banks cannot make any money on fees unless they're lending out that $1 trillion that within the bigger banking system in this country, in the United States, they're sitting on the money. It's not going out there. It's not helping entrepreneurship. It's not helping innovation. It's not stimulating nothing. It's not having any kind of workaround capacity with the consumer. None of this is going on. However, part of it in the financial system would be the following, is that you take it down to negative rates in the money market, where your money sits there, it gets nothing. But then you would want to return that money to the stock market to get a yield on your money. And that would be a mechanical way of getting these markets in a much better condition than what they currently are now. So that would be gimmick number one. But that's, and I use the word gimmick or tactic, let's say. Let's say tactic number one, that would be number one. The most important tactic outside of that would be, like I said, no more taxation right now to America. Let the economy and let the stimulances, which have failed so far. If they do this, then we won't have a failure with the stimuluses. Because what has to happen is that the relief to the American young families and people and the retirees of the world and businesses of the world, the smaller businesses of the world, small cap businesses, mid cap, family owned, they need money to survive. And then that higher tax rate, if you're paying 55% out, and this estate tax that you make money all your life, you should be able to leave it to your kids and not get taxed. If they take that off, that's going to be a big help too. So what I am saying is that there is also some positives, and the way that the markets could go higher. I'm not saying to bank on that. I'm just telling you what the mechanics would be and what to look for and the reason why. And as far as I'm concerned, there's only one bullet left of a stimulant. There's only one. And it's everything that I'm talking about on this tape here and now. And it's everything else that I'm talking about on this radio show. So basically, the Dow could come all the way back up here to 14,000 if they took that off. You would have an immediate rally of about 1,000 points, or 4 to 500 points on an up day. The shorts would come out of the market, because they would. And then people back to a bull trend setup within this index.